Our guest of honor, Yang Berhormat Dato Sri Setia Dr. Awang Haji Muhammad Amin bin Abdullah. Today's event is to officially launch the series of ASEAN business events planned for this year, 2021, the ASEAN Business Roundtables, ASEAN Business and Investment Summit, and the ASEAN Business Awards. Thank you all so much for joining us.
It is indeed a great honor to have present with us today the Honorable Dato Sri Setia Dr. Amin bin Abdullah, Minister to the Prime Minister's Office and Second Minister of Finance and Economy, as the Chair of ASEAN Economic Ministers Meeting and also the Chair of ASEAN Finance.
This year, Brunei is delighted to be the Chair of ASEAN 2021. Our chairmanship comes during a time of unprecedented global challenges that has impacted us all in many different ways.
I'm not able to be with you physically today, but in the spirit of digitalization and self-isolation, I'm delighted to be able to be with you virtually.
I'm very pleased to introduce our plans for the 2021 Business Awards. The inaugural ASEAN Business Awards were the first of their kind in the region, with the dual objectives of recognizing outstanding and successful ASEAN enterprises and to serve as a platform to spread information concerning the ASEAN economic community.
I'm Jenny Malayali. I am delighted to be your virtual host for today. Now, ladies and gentlemen, the roundtable will be made up of 3 sessions. We have an opening session which will be including a keynote address by the Honorable Dr. Amin bin Abdullah, our Minister in the Prime Minister's Office and Minister of Finance and Economy to Brunei Darussalam, followed by 2 panel discussions: Fintech for an inclusive and sustainable ASEAN, and the role of financial literacy in ASEAN's economic prosperity. Now, both sessions do feature senior figures from government and the private sector from all across Southeast Asia and beyond. And of course, being a virtual event, we will need to do things a little differently. So we do have some housekeeping guidelines helpful for us to ensure a lovely, nice, smooth flow for us today. We also want to see plenty of engagement from our audience who join us from all across Southeast Asia and beyond. So housekeeping, for our attendees, we would love to hear from you as well and be part of the conversation. Do post your questions, any comments in the Q&A box. We would also love to hear from you on our social media platforms. Do tag us on Twitter and also Instagram, the handle at ASEANBIS, and use our hashtag ASEANBIS. Now, the bios of all of our speakers and the details of this morning can be found on our website. Once again, that's www.aseanbackbrunei.com.bn. And with that, it's my pleasure to now hand over to Haslina Taib, the CEO, Dynamic Technologies, and Chair of this morning's roundtable. Haslina.
Thank you, Jenny. Good morning. Yang Berhormat Datuk Sri Setia Haji Abdul Amin Liu Abdullah, Yang Mulia Datuk Sri Paduka Haji Ahmadin bin Haji Abdul Rahman, Your Excellency Nguyen Kim Eun, esteemed Joint Business Council members, senior government officials, distinguished ladies and gentlemen, thank you to each and every one of you for being here with us virtually today. Today marks the first roundtable event in the lead up to the ASEAN Business and Investment Summit, which will take place on the 25th of October. And we're proud to be able to host today's roundtable, albeit online, with all of you. Before we get started, I would like to express my sincere appreciation to our lead partners, Brunei LNG and Bank Islam Brunei Darussalam, as well as our other sponsors, Brunei Shell Petroleum, Baiduri Bank, Standard Chartered Bank, Brunei Gas Carriers, and Mitsubishi Corporation, who have generously helped us to make this event a success. Today roundtable, we'll be looking at how the pandemic has significantly impacted lives and livelihoods across ASEAN, how it has changed the way we work, travel, access payments, use cash, and highlighted also the gaps in financial inclusion. With the new COVID-19 wave we are facing, requiring lockdown and endangering the global economic recovery, traditional financial services are constantly disrupted with the acceleration of technology. Fintech evolution has shifted banking preferences to a more affordable, convenient, easily accessible digital experience. The emergence of these new technologies, the increased demand of expectations, regulatory revisions, availability of digital wallets, and the COVID-19 pandemic has accelerated, as I say, these trends. In the first quarter of 2021, fintech startup raised 22.8 billion. That is 50% more than 2020 alone. Whereas the use of cash has reduced more than 42% in the USA since 2019. COVID-19 shutdowns and lockdowns have 80% of us thinking we can bank without a building. A massive 70% increase in fintech apps use indicates that there are more startups. According to iTech, as of February 2021, there are more than 25,000 fintech startups. That's double the number in 2019, with most of the funding going to sectors like mobile wallets, payments, insurance, and digital banking. Outside of apps, fintech has also expanded during COVID-19, such as consumer banking. They partner with fintech companies, increasing their digital banking innovations. Today, we hope the discussion around fintech and financial literacy have a balanced approach on how ASEAN must embrace the new world we now live in, and how important it is to be inclusive in its ease of onboarding for all levels of financial literacy. The increase of digital banks attract certain niche market segments, such as teens, nomads, freelancers. These typically are underserved by traditional banks. Neobanks operate purely digital without physical branches to maintain. In addition to consumer apps like Venmo, companies such as Stripes and Square perhaps are popular in e-commerce and mobile payments, where payments processes are easy for startup and MSMEs. They too begin to act like neobanks, with some providing debts and small business loans. The future is digital. It is important for ASEAN to adopt sustainable strategies and priorities to an inclusive new era in financial services. I look forward to the insightful discussions that are about to take place this morning. Thank you once again for joining us today, and I'll hand over the microphone back to Jenny. Thank you.
Haslina, thank you so much. Ladies and gentlemen, we now hear from Mr. Mubashir H. Kokar, the Managing Director and CEO, Bank Islam Brunei Darussalam, for his special remarks. Now, ladies and gentlemen, BIBD are one of our lead partners and a strong advocate for the development and adoption of both fintech and financial literacy. Mr. Mubashir, welcome. Thank you so much for joining us.
Well, thank you, Jenny. Thank you. Bismillah ar-Rahman ar-Rahim. Young Baromat, Dato Sri Satya, Dr. Wang Haji Muhammad Amin Liu bin Abdullah, Minister in the Prime Minister's Office and Minister of Finance and Economy 2, Young Mulia Haslina Taib, Chief Executive Officer, Dynamic Technologies, as the Chair of the ASEAN Business and Investment Summit 2021, ASEAN delegates, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good morning to you all. It gives me a great pleasure to welcome you to the ASEAN Business and Investment Roundtable 2021. We are meeting at a time unlike any other in our lifetimes, with COVID-19 continuing to transform the way we work, live, and do business. The current pandemic has impacted global economic activity, affecting trade and travel, and severely restricting the movement of people and goods. Amidst these challenges, however, we realize that partnership and cooperation is the best way forward as we try and find a way out of this pandemic. The ASEAN Business Advisory Council's theme of Recover, Stronger, Together, Sama Sama, is therefore timely and relevant and closely aligned with the theme of this year's ASEAN Summit. We care, we prepare, we prosper. As a partner in progress, BIBD has always believed in the idea of being stronger together by supporting the government of His Majesty the Sultan and Young Deepa Tuan of Brunei Darussalam for a dynamic and sustainable economy. As we explored our vision for the future, BIBD saw an opportunity to align our core values. The Maqasid Sharia has always been in our DNA as an Islamic bank. It speaks to the preservation and promotion of faith, life, the mind, progeny, and wealth. It forms the basis of the framework for which we would move into the future to attain not just the national goals of Brunei Vision 2035, but a wider effort to achieve the United Nations Sustainable Development Goals. Earlier this year, we began our earnest efforts towards making the world a better place, guided by the values of Maqasid Sharia. Aligned with the United Nations Sustainable Development Goals and Brunei Vision 2035. Our hope is to lead the way towards a future that is conducive, not just for Brunei Darussalam, but for the wider ASEAN and Asia Pacific region. We also realize that digitization is emerging as a catalyst for sustainable transformation. The youth of this country and this region have taken up the mantle and begun to develop innovative solutions using new technologies such as artificial intelligence, blockchain, robo-advisory, financial technology, and robotic process reengineering. At BIBD, digital has always been the cornerstone of how we do business. Our digital banking ecosystem provides a range of cashless payment methods, many of which have been the first for Brunei. BIBD QuickPay, our QR code-based payment system, for example, has become even more relevant in this current climate, with contactless and cashless payments being preferred in the wake of the pandemic. It was during the peak of the pandemic that we launched our Go campaign to encourage customers to go cashless and to go digital. On the corporate social responsibility, which we take very seriously, we also launched Community for Brunei, a virtual marketplace for micro-enterprises who were adversely affected by the pandemic. An easily accessible website, complete with the digital payment gateway and delivery services, are provided to facilitate businesses to continue to function and reach their customers even as COVID-19 restrictions are in place. This was our humble attempt of enabling and empowering MSMEs with the tools that they would need to succeed. Tools alone, however, would not be enough to ensure success. It is said that knowledge is power, and armed with the right tools, we also want to make sure that the importance of financial literacy is well understood. BIBD has started using digital means to promote financial literacy and education agenda, using social media to reach an audience of almost 95,000 followers with interactive content that would appeal to a wider audience. I hope that these initiatives and activities will give you some context on the deep and abiding commitment that BIBD has as partner in progress for the nation. We are humbled and privileged to play a role in supporting Brunei Darussalam in the ASEAN agenda and hope that this forum will be a unique opportunity for both the public and private sectors to come together and identify ways to promote sustainable economic recovery and growth through innovative digital financial solutions. In closing, I wish everyone a very fruitful and productive discussion as we all seek to explore different ways that sustainability and financial literacy will serve to promote common economic prosperity. I am confident that through this forum, we can share our common experiences, promote closer ties, learn from each other, and deepen our relationship even further. Thank you once again, and have a wonderful day. Back to you, Jenny. Thank you.
Mubashir, thank you so much. Ladies and gentlemen, with that, it's my pleasure to now welcome the Honorable Dato Dr. Amin Liu Abdullah, Minister in the Prime Minister's Office and Minister of Finance and Economy to Brunei Darussalam, for his opening keynote address. Now, the address has been recorded as the Honorable Minister couldn't be with us in real time, but recognizing the importance of the issues, he wanted to still deliver the opening keynote and show his support for the discussions.
Bismillahirrahmanirrahim. Members of the ASEAN Business Advisory Council, Yang Berhormat Dayang Siti Rozai Merianti, Datu Seri Laila Jasa Haji Abdul Rahman, 2021 ASEAN BAG Chair and Chair of Brunei Legacy Project. Yang Mulia Dayang Haslina Haji Muhammad Taib, Chair of ABIS 2021, and Yang Mulia Haji Musa Haji Adinin, Chair of ABA 2021. Distinguished guests, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Thank you for the invitation to deliver the opening keynote address at this ASEAN Roundtable on Fintech and Financial Literacy. I'm delighted to see senior government officials and business figures taking part in the program today from across Southeast Asia, and grateful for your support in contributing to Brunei's effort as chair of ASEAN. The roundtable comes at an important time for ASEAN. Many of us had by now thought the COVID-19 pandemic would be very much behind us, and we would be living our lives as we used to, moving around in public, eating in restaurants, traveling, and spending time with our loved ones. Instead, many of us in ASEAN, Brunei included, are also still grappling with the spread and impact of the pandemic on our lives and livelihoods, and forced to be innovative, nimble, and responsive to this environment that has been thrust upon us. Brunei's theme for our chairmanship for ASEAN this year is We Care, We Prepare, We Prosper. It is designed to demonstrate an inclusive response in dealing with the pandemic, a response that will help ASEAN get back on our feet again and thrive in a new normal. As chair of ASEAN, we have developed 13 priority economic deliverables that have been guided by the strategic thrust of recovery, digitalization, and sustainability. I'm delighted to see that the program for today's roundtable reflects both the strategic thrust and a number of our priority economic deliverables. The discussion today will contribute towards our work on e-commerce, cybersecurity, the ASEAN Framework Agreement on Services that focuses on financial services liberalization, and specifically on financial literacy, where we have a summit planned at the end of the year in conjunction with ASEAN Savings Day 2021. Despite the crisis, ASEAN is one of the fastest growing regions in the world and continues to offer long-term great potential. ASEAN is also one of the fastest growing digital economies in the world. Banks and Companies E-Economy Southeast Asia report notes that the COVID-19 pandemic has led to big shifts across Southeast Asia, highlighting that 40 million people came online for the first time last year, bringing the total number of internet users in the region to 400 million. The Economic Research Institute for ASEAN and East Asia points out that ASEAN consumers are global leaders in terms of e-wallet and digital payment adoption. This offers great opportunities, but also challenges, as we must keep inclusivity in mind and ensure that with the rapid rate of technological advancement, it does not leave anyone behind. Financial literacy plays a crucial role on inclusivity. Not only it is important to understand money and the changing nature of transaction, both for personal and business purposes, but digital financial literacy has become essential if we are to achieve our goals of ensuring that everyone can benefit from the advancements in fintech. ASEAN governments are continuing to meet virtually to discuss what steps can be taken to help our region continue to be vibrant as we draw closer to the summit in October. I look forward to hearing the outcomes of the discussion and including them in our discussions with our ministerial colleagues in the coming months. To conclude, I thank you once again for the opportunity to deliver the opening keynote address at this ASEAN Roundtable on Fintech and Financial Literacy, and I look forward to hearing the outcomes of the discussions to follow. Sekian, wabillahi taufiq wa hidayah, wassalamualaikum warahmatullahi wabarakatuh.
Honourable Minister, thank you so much. Ladies and gentlemen, we're about to transition and bring all of our speakers onto our virtual stage, but we do now have a short video from our lead partner, BIBD.
We envision a future where the days could be crafted for those in our ecosystem. Technology programs us to be linear. It can equip us better to weave through life seamlessly. We are evolving as a nation, and so with the tools that serve us, propelling our days and preparing us to be ahead of time. Reaching for sustainable ingredients with ease may become a standard in commerce and our daily lives. Supporting and growing the local industries in hopes that it may flourish in the rest of the world. Opportunities to cultivate paths that were once hidden, now crystal clear, closer than ever. Technological achievements that are centered around humans to elevate us and innovate for a sustainable future. Our journeys have led us this far, and the next frontier is tomorrow. As you progress in the world of financial technology, BIBD is your partner.
So with that, ladies and gentlemen, let's move straight into our very first panel discussion on FinTech for an inclusive and sustainable ASEAN. We have our fantastic panel of experts from Vietnam, Cambodia, Singapore, Indonesia, and Thailand. And our session today begins with a keynote address by His Excellency Mr. Nguyen, the Deputy Governor of the State Bank of Vietnam, followed by a discussion. And for all of our guests who are with us, let's remind you all about the chat box function. That is where all the questions and comments will go to our panelists in a short while. So for now, we're going to hand over to our moderator, Mr. Jonathan Wong. And Jonathan Wong is the Chief of Technology and Innovation at UNESCAP, who will be leading us through our next session. Mr. Wong was previously the inaugural Head of Innovation at the UK's Department for International Development. He has extensive experience in social innovation and entrepreneurship, innovative financing, impact investing, and technology. He's also served on APEC's e-commerce business council, the UN's Capital Development Fund Board for ASEAN, and is a World Economic Forum Schwab Fellow. Mr. Wong, great to have you with us. I'm going to hand over to you.
Thank you very much for that very kind introduction, Jenny. Excellencies, distinguished participants, ladies and gentlemen, it's really my honor to moderate this session on FinTech for an inclusive and sustainable ASEAN. And many thanks to the organizers for, one, inviting me to moderate, and two, for highlighting this very important topic. Let me start very briefly by giving some context and to reinforce some of the points that the honorable speakers have just made. I think the pandemic, as we know, has really changed the way we live, work, and indeed a defining feature of the pandemic has been the accelerated digital transformation that has permeated every aspect of our lives, the way we work, the way we do business. And in terms of business, it's fair to say that companies that have had access to the digital world, e-commerce, digital finance in particular, fared much better than those that haven't. And just to give a bit more context, of course, I work for the UN, and I of course have to mention the Sustainable Development Goals. And it's worth mentioning that at the moment, before the pandemic, we were actually off track as a region to meet the SDGs, and because of the pandemic, we are even further off track. And this is where financial and digital inclusion will play a really prominent role, as they figure across 8 of the 17 SDGs, and will be critical for the region to build back better from the pandemic and indeed meet the ambitions of the SDGs. And it is in this context today that we are joined by leaders from the fintech space who will share with us their thoughts on how fintech can help Southeast Asia and ASEAN to build back better with inclusivity, sustainability, and resilience. But as Jenny mentioned, before we move to our panel discussion, it is really my honor to invite His Excellency Mr. Nguyen Kim An, Deputy Governor at the State Bank of Vietnam, to give a keynote address. Your Excellency, over to you. The floor is yours. Thank you.
Technologies and Chair of the ASEAN Business and Investment Summit 2021. Mr. Mubashir H. Koba, Managing Director and CEO, Bank of Islam, Brunei Darussalam. Ladies and gentlemen, on behalf of the Management Board of the State Bank of Vietnam, I would like to express my sincere thanks to the ASEAN Business Advisory Council for inviting the SBV to attend and deliver a keynote at ASEAN Business Investment Roundtable 2021 on Fintech and Financial Literacy today. This is an honor as well as an opportunity for the SBV to participate in discussions and listen to sharing and recommendations of experts, managers, and prestigious scholars on Fintech and Financial Literacy for the inclusive and sustainable development of the region. These are the key to support the strategic thrust of the ASEAN 2021, namely recovery, digitalization, and sustainability. Ladies and gentlemen, COVID-19 pandemic has made great impact on all aspects of socio-economic life around the world, as well as in Southeast Asia over the past 2 years, putting pressure on the global economy. This is not only a threat to humans' health and welfare, but also a disruption of the world economy. Currently, most governments in the region have been forced to apply social distancing measures, limit social contact, even lockdown to control the outbreak and spread of the virus. The restriction of contact and travel due to the COVID-19 pandemic has significantly restricted trading activities, social contact, and transaction. In the context of the pandemic and due to the impact of these restrictive measures, staff from banks have to work remotely for long periods of time. At the same time, as the bank branches restrict direct contact, existing potential customers can only access, transact, and use banking services via digital channels through devices such as computers or mobile phones. In this situation, banks have quickly seized their opportunities to accelerate digitalization process, products, and services, relying more on digital technologies and data analytics for sustainable and continuous operation, providing fast, instant, safe, and secure services, meeting the sudden increase in demand of customers through digital channels. It can be seen that in the pandemic has boosted technological innovation, creativity, as well as accelerated the application of financial and digital technologies to enhance financial access and resilience to risks. Meanwhile, digital transformation and financial technology application play an important role in the economic recovery process after the pandemic. In the long term, fintech would help people and businesses to maintain and increase their accessibility to financial services, even during lockdown, support businesses to reopen in the new normal. The trend of non-cash payments will continue to grow stronger due to a change in the part of consumer habits and behavior, as well as the development of innovative fintech to make payment convenient, promote the purchase and sales of goods and services, reduce transaction costs. Besides, fintech solutions on credit contribute to shortening the time for funding approval and injecting capital into the economy. Hence, fintech holds great potential in solving the challenges and obstacles caused by the pandemic. It's also an opportunity for traditional financial institutions in ASEAN to speed up their digitalization, significantly shortening the roadmap to digitalize banking activities. Indeed, fintech has promoted banks' digital transformation. The process of digital transformation in the banking sector was accelerated before the pandemic. However, the pandemic outbreak has fastened this process to ensure the operation of banks and meet customer requirements. In addition, the restriction of contact and travel has contributed to promoting the development of fintech in the payment field, encouraging the use of non-cash and contactless payment methods to reduce the spread of disease. Ladies and gentlemen, the strategic priorities of ASEAN 2021 is recovery, digitalization, and sustainability. However, the COVID-19 pandemic has caused significantly negative impacts on the implementation of the 2030 Agenda for Sustainable Development, as this is threatened to public health. National priorities and support for international development might shift to immediate humanitarian concerns. Not only supporting the economic recovery process, as mentioned above, fintech also plays an essential role in sustainable economic recovery and development. Fintech will open up new opportunities for economies around the world in general and ASEAN economy in particular, both for economic development and environmental protection by promoting green growth. Fintech can assist organizations and individuals to make the best decisions about environmental, social, and governance or ESG investment by providing quality data and tools as committed in the ASEAN Business and Investment Summit. Vietnam is making efforts to become a destination for regional and global business investors and will continue to cooperate with ASEAN member states and ASEAN's partner countries to provide practical support programs for businesses in the region, especially in the fields of digital transformation, ESG, technology, and future employment in the region, as well as sustainable and inclusive development. In order to promote the role of the central banks in combating climate change, I believe that central banks need to coordinate with other regulatory agencies in the monetary and financial sector and related industries to develop solutions on concentrating resources to grant credit to projects with economical and efficient energy usage, develop clean and renewable energy, apply environmentally friendly technologies and equipment, and at the same time control the granting of credit to industries and fields with negative impacts on the environment, continue to improve the policies on ESG factors based on international standards and conventions, and develop a mechanism to supervise and inspect the implementation of the environmental social management system. Ladies and gentlemen, fintech plays an important role in promoting financial inclusion too, through improving access to financial services to the unbanked people or those facing difficulty in accessing traditional financial and banking services. Fintech companies can serve as the extension arms of banks to reach financial consumers by expanding the transaction network, simplifying the use of financial services, providing more suitable services to satisfy various types of customers, based on the analysis of user information through technology solutions. In Vietnam, for example, after the introduction of policies on accounting opening or electronic Know Your Customers or eKYC, statistics show that 14 banks provide eKYC-based payment account opening services to individual customers with more than 618,000 active accounts from end of March to the end of June 2021 only. This is an impressive number in the current context of the complicated COVID-19. Recognizing the importance of fintech and digital economy, Vietnam's National Financial Inclusion Strategy to 2025 with a vision to 2030 has identified one of its objectives being to promote the digital technology application, enhance innovation in the design and distribution of financial products and services which are simplified, convenient, easy to use, cost-saving, and suitable for needs and affordability of people and businesses, especially SMEs and people who live in rural, remote, and low-income areas. In the near future, hope that we could well control the pandemic and recover the economy thanks to the collaborative efforts to control the pandemic in many countries along with the development of COVID-19 vaccines. In order to take advantages of these opportunities as well as overcome challenges and risks in the process of applying Industry 4.0 and fintech, countries should prioritize transformation towards Industry 4.0 in line with their economic development level and consider Industry 4.0 as the main driving force in policy action and technology development. With regards to financial inclusion promotion, the governments can take various measures including, first, continue to improve the legal framework to create favorable environment for the application of digital financial services, development of distribution channels, digital banking products and services on mobile devices, as well as solutions to ensure information security and safety, thereby improving access to financial services, increasing conveniences and customer satisfaction. Second, continue to improve financial information technology and telecommunication infrastructure, especially in rural, remote, and isolated areas, in order to improve the coverage of financial products and services, as well as increase financial aspects for access for people and businesses, especially low-income and disadvantaged people. Third, promoting solutions to protect financial consumers in the digital era. Accordingly, it is necessary to develop a legal framework to protect financial consumers effectively, which is in line with the digital environment, at the same time promoting communication and education of people in accessing and using digital financial services, as well as improving personal financial management skills. Fourth, strengthening the inspection and supervision of safety operation of the supply organizations, with a special attention to non-banking financial institutions and payment intermediary service providers. This is to timely detect and prevent risks and build customer confidence when using digital financial products and services. In Vietnam, fintech has experienced rapid development in recent years, especially since the outbreak of the COVID-19 pandemic, thereby significantly contributing to increasing financial access for people and solving the difficulties and challenges caused by the COVID-19 pandemic. I'd like to brief you some achievements of fintech activities in Vietnam in the past times. First, in Vietnam, payment intermediary service providers, which are considered as fintech in a payment area, have shown an active role in social distancing period. Their activities help to create favorable conditions so that people and businesses can make electronic payments transactions quickly, smoothly, safely, securely, and reduce the risks of COVID-19 transmission through the services such as e-commerce, food delivery, transport, booking, top-up, utility bills payment, QR code payment, etc. Payment transactions via internet and mobile channels in Vietnam have experienced high growth during the social distancing period due to the pandemic. In the first 6 months of 2021, the volume and value of transactions via internet channels increased by 62.5% year-on-year and 32.03% year-on-year respectively. Transactions via mobile phone channel increased by 82.71% year-on-year in volume and about 115% year-on-year value transaction via QR code channel. Secondly, digital transformation activities have been actively implemented by credit institutions in Vietnam with remarkable results, when up to 95% of them have been developing and implementing digital transformation strategies. Most banks have applied technical solutions and new technologies in their operation and service provision, of which 9 out of 19 operations have been completely digitized by some banks, such as savings, term deposits, payment account opening, and using bank cards, e-wallet, money transfer, etc. Many banks have also applied AI, ML, and big data technologies to evaluate and classify customers and make disbursement decisions, etc., in order to simplify procedures and shorten disbursement and loan provision time. It can be said that fintech has been showing its potential and role in helping financial institutions accelerate digital transformation, especially in the past 2 years under the impact of the COVID-19 pandemic. Fintech makes an important contribution to recovery and development of the economy in the wake of the COVID-19 pandemic. Moreover, thanks to fintech, the process of post-pandemic economic recovery could be quick and effective and may arise new trends in the economic structure. Above are some of my sharing on the role of fintech in sustainable and inclusive development in the ASEAN region and some experiences of Vietnam. Thank you for your attention, and I wish the Roundtable a great success.
Thank you very much, Your Excellency, for perfectly setting the scene for the session we will have just now. So thank you very much, Your Excellency, again for joining us and for those insightful remarks. We will now move on to our panel discussion, where leaders in the fintech field will share their work and perspectives on how fintech can support an inclusive and sustainable ASEAN. Before we get started, let me firstly introduce the panel. Firstly, we have Her Excellency Dr. Sri Chia, Assistant Governor and Director General of the Central Bank, National Bank of Cambodia. Thank you for joining us here today. We have Mr. Sotnendu Mohanty, Chief Fintech Officer, Monetary Authority of Singapore. We have Mr. Adrian Gunadi, Founder and CEO of Investry and ASEAN Back member for Indonesia. And last but not least, we have Mr. Kelvin Tan, Global Lead Nexus at the Standard Chartered Bank. Again, before we get started, a reminder to the audience, I see many of you have done so already, to post any questions you have in the chat as this panel discussion will be followed by a Q&A. So without further ado, let's get started and really open with a question, a very broad question to the panel around indeed how FinTech can support an inclusive and sustainable ASEAN. And let me first turn to Your Excellency, Dr. Chia, for your perspectives on that very broad question. My apologies, but over to you first. Thank you.
Well, thank you, Jonathan, and thank you for having me. On your question, just repeat your question. So how can FinTech promote financial literacy or financial inclusion? Yes, that's fine. Yeah. Financial literacy. The financial, I suppose, hand in hand. Maybe. Well, there is a survey that has been done by the World Bank, the Global FinTech Survey, and the question were asked to different countries in the world, and I just happened to consolidate the statistic from the ASEAN country. Unfortunately, the latest survey that was done was in 2017, but I think it's still relevant. So the question asked was, what are the reasons for people not having a saving account in a financial institution? 70% of the reply of this the survey in ASEAN responded that because they don't have money, which is quite interesting. And then the second main reason was followed by that's about close to 40%. They say because they don't need financial services. And then the third and the fourth, which is quite close together, is the lack of documentation and too far away. And I think even though FinTech can't solve, with the first reason, which is don't have enough money, but I think for the third and the fourth reason, which is lack of documentation and too far away, this is where I think FinTech can come in and bring financial services closer to home. And that has been done through the mobile phone applications where you can transact 24/7 from the comfort of your home without traveling. And if you think about how it can also empower women, it helps women to be home and take care of whatever business that she has without having to be physically traveling the road and take the risk to a financial institution branch and do her transaction. So that's in a way help with it. In terms of the lack of documentation, I think it can also help with the amount of data that has been collected through digitization, and again that can also help with opening an account. If I can't come up with an ID, would something else help in identifying me? I don't think there is any real example where this is applied, but I think that anything is possible. Would a photo of myself, a selfie of myself, if I identify my location, and if it's proven that on Google I mostly stay at that very same location, overnight, would that be enough to identify me as a person? And this has go a long way for migrant worker, illegal migrant worker. How can we empower them to have access to financial services and remit money home? And it's not going to solve the fact that they are illegal, but it can help them to properly remit money home and not remain in the illegal space forever.
Thank you so much, Your Excellency. Yeah, and particularly on emphasising that point on engaging formal, indeed, women who are often left behind during these kind of various technological revolutions that we have. But I'll maybe come back to some of those points later on, because I saw your CNN interview, Which you articulated these points again very well. Let me now turn to Sonendu for some perspectives on fintech, particularly around kind of the opportunities for inclusion and sustainability in ASEAN. Over to you.
Hi, good morning. It's a rainy day from Singapore, and I hope wherever you are, it is quiet and it is bright and sunny. Well, that's quite a broad question in terms of the impact of fintech and inclusion. I think the previous speakers have gone in length in expressing that in terms of the impact and the numbers and the ASEAN growth. But let me, for the audience here, narrow down to a particular ASEAN situation when it comes to fintech and inclusion. And I like to break those three terms under three buckets. There's a distribution opportunity, there's an instrumentation opportunity, and there's a manufacturing opportunity. Largely, the ASEAN story and also the global story has been a distribution story. How to make fintechs, financial services accessible to people, how to make payments easier to process, how to make the QR code common for everybody to transact. We have recently heard Cambodia linked to Malaysia, how to make the process of accessing the payment services easier. To me, these are largely distribution challenges addressed by fintech, and it's actually had a huge impact because distribution challenges were primarily excluding people when it comes to financial services. And a lot of technology has gone, a lot of apps have been developed, a lot of money has been invested in companies who are solving this problem. And I would say on a scale of 10, the ASEAN is doing 8 to 9 when it comes to solving the distribution challenge in fintechs. And they have done inclusion, impact, and other things. But there are a lot of work to be done on the other two, on the instrumentation. And let me explain this. When I say instrumentation, it's not like you go and sell the same deposit and same checking account and the same mutual fund to the people. I think instrumentation means how do we, now we have solved the distribution problem. We have a wider segment of people who can be part of the financial services. Their needs are quite unique as their income segment that is quite different. We need to design instrument very different kind of product for them. How to design a pension plan for a very poor, for an unstructured labor force. How to design micro insurance for small risk coverage for poorest of the poor. And you need to create those instruments. And that is those instruments today largely doesn't exist in ASEAN market and in many parts of the world. And that's the piece which fintechs have to step in. And that's not the easy money for them. Fintechs have largely made a lot of money by indulging in the distribution problem, credit to them. But this is a difficult problem, the instrumentation problem. So somebody has to solve it. This is where the incumbent, the bank, the regulators, the policymakers, the market infrastructure all have to come together, including fintech, to design new product for this expanded financial sector. And the third part is manufacturing problem. Okay, we can design a smart insurance product or a smart pension product. Who's going to manufacture? Which asset management company is going to put the money behind and support this risk coverage? So you've got to start building the manufacturing capability for designing this new product. So when it comes to manufacturing and distribution of financial product for an expanded included financial sector, I think we have a long way to go. Fintechs who are tackling this subject, we call it B2B fintech, have a long sales cycle, they're a long time to deal with. And we see a lot of fintechs, especially the matured one, may not be glamorous enough to be visible in the public space, are working in this space. So that's my pitch when it comes to the ASEAN state of situation when it comes to fintech. And let me wrap this by saying that underlying this three way of doing things, there's a need for public digital infrastructure. And when I say public digital infrastructure, it means four things. First, let's take the ASEAN context. Every country must have a trusted digital identity, a digital ID. Every country must have a trusted corporate digital identity. You cannot be saying that you are a digital economy when you don't have a trusted ID of yours in the digital space. That doesn't work. It is highly ineffective. You cannot design product if you are not digitally identified in a trusted way on the network. Second, we must have a method or a process or a governance structure to exchange data. We have seen what is happening in China. We have seen what's happening in ASEAN market. In many countries, people are worried about data abuse and how to ensure that we build trusted data exchange so that we can move data, the digital data in a trusted way. Third, which I think a lot of progress has been made, is on the payment side. How do you move money efficiently? And let me be very particularly brutal here. We have been largely congratulatory to ourselves when it comes to connecting payment system. But let me give you a brutal fact of life. Despite all this improvement, the cost of moving money from A to B across the border is still $15 to $10 per $100. That is brutal. That is unacceptable. We got to fix it. And I'll take an example. When Singapore and Thailand connected their domestic payment network, that same $15 of cost per $100 transfer went down to $3, a $10 benefit to the poor people who receive money. And that's the heavy lifting we must do, connect our banking domestic payment system to improve the real cost of transfer. With due credit and due recognition being given, we are solving the front-end problem in QR payments and other things. And the fourth piece is what I call is consent. We must give the power of consent to individuals and corporates when it comes to exchanging data. The third party cannot have access to data purely writing a very complicated 3 and C. The power of consent should be with the citizens, and we must have a system where we can consent our data to third party. This 4 foundational infrastructure will solve the 3 challenges I articulated. To me, that's the current state of ASEAN FinTech.
Great. Thank you very much, Somnendu, for that. And again, we're doing well, but we're not there yet. I think is the message I get from that. And thank you for very much articulating those challenges so succinctly, and indeed the solutions as well. Let me now turn to Adrian for some perspectives on that very broad question. So over to you, Adrian.
Thank you. Good morning, ladies and gentlemen. I think it's a bit different story for Indonesia. FinTech has tremendously grown in Indonesia over the past 5 to 6 years. I think this stems from the fact that Indonesia, before FinTech was around, we had a huge issue with regards to financial inclusion, financial access. In terms of savings account, it was less than about 30%, the savings account penetration. In terms of the credit gap to SMEs, it was around 100 billion as recorded by the World Bank. And so when we see the rise in technology, the growth of technology, particularly FinTech over the past 5 to 6 years, I think this became one of the key agenda that was supported by the regulator, in this case, OJK and also Bank Indonesia, but also the incumbents actually embraced on how we can build further collaboration with FinTech. And so this is a journey that we have been on over the past 5 to 6 years in developing the industry. Predominantly, I think for Indonesia, there are 2 main streams of the FinTech industry that has grown. One is on the payment side, and the second is on the lending side, of which I actually am also chairman of the Indonesian FinTech Lending Association, of which we have 122 FinTech lending platforms that are registered and licensed with the OJK. And we obviously see how this access to finance for small businesses has accelerated because of the previous credit gap that I mentioned. There are several sub-segments within the Indonesian FinTech lending space. One is focusing on the consumer side. A recent product that has grown very rapidly is the Buy Now, Pay Later, which connects with e-commerce platforms. On the micro side, obviously we see a lot of rural developments in terms of digital finance to the rural areas. And what's unique, many FinTech players are actually working together, collaborating with agri-tech. We see a strong collaboration in the micro segment between the agri-tech and the FinTech lending players, of which that gives more access to data, more access to information, which is very relevant. And the third segment that we see is in the small, medium, and business space. Strong collaboration between the B2B e-commerce, the e-procurement, because we see that more and more SMEs are going online. And I think this is very relevant to what we are facing right now in terms of the pandemic, how the pandemic has actually accelerated SMEs to go online, to sell their products and goods online, to access more digital solutions. And I think this is part of the evolution where fintech is playing a critical role in providing this access to finance, specifically to the underserved in Indonesia. The next point that I wanted to highlight is actually something that we also see in the recent development, that the fintech are actually now also developing or adding new products and services beyond the traditional lending. I think Supnendu also mentioned about catering solutions, and I think what's unique is some of the fintech players are actually developing business solutions jointly with partners for SMEs. For example, cloud accounting services, digital invoicing, and so combining or adding or new solutions on top of the traditional lending piece that they've been developing. So we look at it as a more embedded finance story evolving in Indonesia because of this cross collaboration with ecosystem. So fintech on its own, it's now being embedded into other unique digital ecosystems, as I mentioned, like the e-commerce, agri-tech, logistic tech. And so this is how we believe that going forward, there will be a stronger collaboration amongst verticals. But also what's unique is a strong collaboration between banks and fintech in Indonesia, given the fact that there is also a requirement for banks to have at least 30% of their portfolio in productive space, for example. And so this collaboration between banks and fintechs enables banks to acquire the SMEs at a much lower or cost-efficient manner. It enables the ability to underwrite credit that was not possible previously, because obviously the scoring engine that the fintechs would use is using alternative data source from the e-commerce behavior data of the SMEs, inventory data. So I believe this is a very unique angle on how fintech and collaboration with other ecosystems has enabled us to continue to the gap, the financing gap, and drive more inclusion. And in 2020, the total fintech lending industry facilitated almost $5 billion of loans to small, medium enterprises, which is almost a 30% increase compared to 2019. So we see how in the midst of the pandemic, 2020, the industry continues to grow, and more importantly, provides a lifeline to the small, medium enterprises in Indonesia that has been impacted because of the COVID, but also how the industry is now looking at new ways of expanding and developing embedded finance through other digital ecosystems. So probably I'll end there as a showcase of what we have done to further accelerate this inclusion in Indonesia and how technology and fintech is playing a critical role in addressing the underserved or unbanked segment.
Thank you very much, Adrian. And what came out very clearly from the Indonesia experience there was this importance of collaboration, both between kind of tech players and the broader ecosystem and integrating solutions as well. So thank you very much for that. Kelvin, over to you.
Hi, everyone. The problem with going last is because all these very intelligent people have gone first. It's really not much value add I have to this entire conversation.
Right?
So I will say this. I will say that every one of the speakers have brought up all very good points. I love Supnendu's 3 problems and 4 infrastructure solutions framework. And I fully agree, right? So what I will do instead of talking about the fintech ecosystem, which everybody has espoused to death, is really saying this. What we are doing is trying to solve for it. What we are doing here in Nexus is creating an engine, a middleware layer, a capability to entrench ourselves as a banking as a service with multiple ecosystem players and enable access, plus the production mechanisms which Somnamdu is hoping for us to, for fintechs to get into more, to provide capabilities for the segment of one in mass market retail lending or retail and MSME capabilities across ASEAN. And absolutely right, Somnamdu is completely right in the fact that as we are trying to roll out in multiple countries, we find that the unevenness of the infrastructure requirements makes it difficult, right, for speed of execution and true inclusiveness from a region-wide perspective. So I'll stop there because I think there are far more interesting questions ahead of us than to expound upon the high-level view of fintech in ASEAN.
Great, thank you, Kelvin. And yeah, we have a lot of questions coming in, so let me kind of move straight to that this session of this part of the session. So let me start with this one. Well, what do we have here? So I'm reading off my phone. Bear with me. Policy process and legislation doesn't move at the same speed as fintech adoption and digitalization uptake. And what is an interim platform being considered when regulatory sandbox structure is not the same across jurisdictions? So I think broadly this is a question around regulation and potentially stifling innovation. But I think with this one, I think maybe I tend to Dr. Chia first, and then Somnamdu, because I know a lot of the sandbox work in Singapore as well on this question of regulation. So over to you, Your Excellency, first.
That's not an easy question, I think. and it is always the case that the private sector will always move ahead of the regulator, whether it's in fintech or in other financial innovation. In this particular case, what I can share with what we've done in Cambodia is we took this approach of observing what's going on first, learn how it's done, and have a very active dialogue with the private sector, and then try to come up with the regulations that protect the depositors or the users, consumers, and I don't think there is any one-way approach. Maybe Somnamdu can add more to this. I think for us regulator, it's just trying to be open-minded and see what is happening on the ground and discuss, as I said, try to understand what's going on and work on regulation later. You can't regulate something ahead because you don't know what could be the consequences on this. I remember I can share an example of what we've done with the e-wallet when it first introduced in Cambodia I think it was in 2009. And at that time, I think the one M-Pesa was quite prominently spoken of at that time. And when e-wallet, a company called Wing came to us, I was a bank supervisor, and my reaction was that, well, if you take money from the public, then you are a bank, and therefore I need to regulate you as a bank. And then we had to go all the way to negotiate. Well, this is not a deposit. This is just, an earmarked deposit. So can we find other way to regulate us rather than, put us in the bank basket, which would require a lot of minimum capital requirement, a lot of prudential regulations and compliance, etc. And so what we did was we tried to find a middle ground where we can let this new animal into the industry, but then at the same time observe what was happening. So the first things that we did was to allow it to, of course, go on live, but they had to be attached to a banking institutions because we didn't know what it was at that time. And so we said, well, since we don't know what it was, we want a bank, and at that time was a big Australian bank. We said, if you can take the risk on their behalf, then we will let them do this business. And we want to make sure that the money in the wallet is fully protected. And we had no regulation. It was a simple sort of agreement between the bank and the regulator at that time. There were no other framework for other players to come in. And so when we observed this one player actively, doing their business and growing, then we start thinking of, what went wrong, what we can do better, and come up with proper regulation. That's the way we did it at that time.
Great, thank you very much, Dr. Chia. So Nendu, I'm sure you have perspectives on this.
If you take the word technology out, I think that question it's quite easy to answer because it starts with policy and regulation, and adoption follows it. But the moment you add technology, this three-word gets completely disrupted. Primarily because technology starts with adoption. That's the very nature of the way a technology-driven ecosystem operates. You start with adoption, and that's the reason why regulation is principle-based, because you have principles been set in the regulation, broadly capturing the particular services, and then there's a regulation which backs it. The challenge comes is most of the regulations falls into some sort of gray area when it comes to instrumentation. When you design a product and then you look for regulation to support that product so that it can be sold. And to answer that question, many regulators have responded by creating sandbox, where you go there, you put your product, you work with the regulator on a 6 to 1 year period, and you test it against a constrained environment, and then you understand the risk, and that same activity get regulated after the sandbox. So the answer is not easy to execute this particular process, because it needs, while it may not happen the same speed, but the way I see that you start with the idea, it gets to an adoption state because of technology and new product design. There could be a sandbox activity going in partnership with regulator. Till it attains a systemically important state, it becomes an important topic for regulators to put the policy stance, and hence regulation follows. But the question is not of speed, the question of how you sequence it efficiently so that you don't delay regulation and policy stance on a great idea. Great example is buy now, pay later. You look at every country, it's gone crazy. People are really loving the product because it is easy. People at the point of sales are excited that there's a cash flow solution for them. But regulators are now getting concerned because it has become very systemically important. It may create unintended consequences. But here comes the ability for regulator to respond at a speed, and hence not protect that from getting those issues coming out of this particular new product. But that doesn't mean stop it. You must have a thoughtful regulation responding to that. And that's where comes the activity-based regulation. When you look at a particular activity, look at the risk it poses and proportionately regulate it. Don't put the full force of regulation and kill a good product. So this is how a journey will move on in this space. There's no easy answer. But if I have to call out one thing which we need to upgrade, it's the talent. We got to, because this is engineering, this is technology. You have to upgrade the talent skill set of policymakers, regulators, and the industry to be able to appreciate what it needs to make it work properly in the ecosystem. So talent to me is something, if it addressed rightly, you can solve the other three parts easily.
Great, thank you very much. I just want to dwell on this question a bit more, actually, because of course ASEAN is an intergovernmental body, and we've heard from the public side. But I'd like to hear from the private side as well, actually. So maybe Adrian and Kelvin, you could share some brief perspectives on this regulation challenge as well from your side of things. Maybe Adrian first.
Yeah, let me try to also add in to what we are doing. I think the role of an appointed association that acts, so quote unquote, like a self-regulating organization is also helpful to manage the speed of this innovation. And I think this is what we are doing in Indonesia. So there are an appointed association acting like an SRO, where we have our own market conduct, we set our own code of conduct or ethics policy, We also have data, a centralized data. We're able to actually provide or advise policy also on the practices of some of the fintech lending platforms. So this is how we work together with the regulators to ensure that we are able to uphold the standard practice, clear information to the users, but also uphold consumer protection. Because I think this is also an issue that how do you balance within the growth, but also maintain a high degree of consumer protection. And definitely, I think having an active and a more, I would say, faster implementation in terms of the association level would support what is set in the overall policy of the regulators. Again, we see how the decision or the policies can be a bit behind compared to where the development is. So I think that is the role of members association to drive that and basically have a clear guidance and also framework, and more importantly, have a clear code of conduct that can be enforced to the members as well.
Great, thank you very much. Kelvin.
My view is slightly different to the rest of the panel. I think that it may be prudent, obviously, from a regulator's perspective, to try to ensure the efficient approvals and reviews and the right level of scrutiny in terms of anything that comes from a financial innovation standpoint. But the truth of the matter is that there will probably be a mix of approaches, right? As Somnendu nicely pointed out, and as Adrian nicely pointed out, there will be some attempts at self-regulating and ensuring the public. And don't get me wrong, I think the regulator has the mandate, right? Given that they are usually headed by someone who has won a mandate at an election, they have the mandate to ensure the protection of the country, right, of the citizens of the country and the businesses in the country. And therefore, in exercising that mandate, they should be prudent in ensuring that we don't do anything silly. No one does anything silly. And therefore, that's why banks have a massive compliance departments to deal with these things. That's it. To try to envision a one-size-fits-all end-state process is great, but I don't think it'll ever happen. What will happen is there will be technology companies or fintech companies, or however you want to brand them at base, where they will take the risks necessary with or without regulatory approval if they think the size of the price is big enough and if they think that they've solved for all the things that need to be solved for, right? Buy now, pay later is a very good example of something like that, right? And financial in China was a very good example of something like that. That's it. On the flip side, I think the hubris that comes from a lot of fintech companies who try to say, oh, look, I kind of think this works. I kind of think that we've solved for all the consumer and all business protection requirements. Generally flips back on that at some point in time when the thing becomes big enough and more significant, such that the regulator reviews it more stringently. So this constant pull and pull will be the case in the near future, in the foreseeable future. In fact, I would bet in my career lifetime, until if we all strive towards a uniform, efficient way of policing this, you will have one, and there will be some standard and policy for it, but it will not run the way that we all dream it will run. I think that's my view.
Right. Thank you so much. We have a lot of questions. This is a very lively audience, so let me try and get through them all. And the next question is, do you foresee that any ASEAN member states would adopt the digital iteration of their currencies like the Bahamian government had done with their sand dollar? I think this is around digital currencies, and I've been asked to ask this question to Dr. Serey. So over to you.
Sorry, could you repeat the question again?
Oh, do you foresee any ASEAN member state would adopt the digital iteration of their currencies? I think this is a question on digital currencies and central banks and some of the pitfalls or maybe opportunities that may cause. So we welcome your thoughts on that. Another tricky question.
I don't know. I think from a cultural perspective, a lot of the ASEAN countries are very conservative, and I think our elderlies are, they love to hold on to their cash. That's just culturally speaking. In terms of whether it is politically or technically possible, I think it could because if you look at the use case of this digital currency, it would be very helpful for developing country where financial inclusion level or the existing financial infrastructure is not efficient yet. So if you look at ASEAN country, apart from Singapore and to some extent Malaysia and Thailand, the rest of us have a very low level of financial inclusion. Actually, according to the global Findex data, as of 2017, it may be changed afterward, but as of 2017, less than 50% of the populations in the rest of the 7 countries of ASEAN have access to financial services or have a bank account. And so it could possibly justify, the fact for central banks to look into, ways to make access easier. But having said that, I think access is only one issue to be solved in the whole problem, since we're talking about financial literacy. I think we try a lot of the time, we try to address the supply side of financial inclusion, that is making access easy, cheap, and everything. But we haven't addressed the demand side, which is, the people. And try to see, once they have access to this cheap and easy funding, what are they going to do about it? Do they know how to manage it? And that is another question where I think financial literacy can help. And financial literacy, it's a long effort to build. It can't happen overnight. In Cambodia, we try to embed financial literacy element into the general education program. So children from grade 1 up to 12 will be learning, how to calculate interest rate, how to do annuity and things like this. That is something that I think we should also be addressing. If you look at the micro, I saw some questions on SME. When you look at, how we want, ASEAN, we have this AEC concept, ASEAN Economic Community. And I think the fact that we don't have that financial inclusion at a certain level, it impede a lot of small businesses to access funding. And when our small businesses can't access funding, it risks to be driven away by, businesses from outside. There were, and in 2015, there was a survey done by the Economist Intelligence Unit looking at how ready businesses in ASEAN are in embracing, the ASEAN Economic Community. And at that time, it says somewhere about 60–70% of the businesses were ready to embrace AEC. But the interesting point of it is that the majority of the company survey were multinationals. They were not even ASEAN homegrown companies. And if you were to take ASEAN homegrown company, I don't think they're ready. And I think financial inclusion is probably raised as one of the main challenges for these companies to get enough information. So, there are surveys on, what are the challenges for SME to grow. And they were access to finance, access to information, R&D, and there's one more thing. But I think all of this will come under, access to finance. Do you have money to buy information from the market? Do you have money to go into R&D? And so this is, again, something that we have to really look into, how to help our small and medium businesses access to financial services so that they can grow, so that they can compete, and especially to promote the region as a whole, and not, creating all these easy sort of, trading channel, but in the end, it's multinational companies from elsewhere who come and benefit, and it's not our own, regional homegrown companies. This is not to say that we should have preferential treatment, but I think there's a lot of homework to do in the region as well. That's my take on this financial inclusion and trade in ASEAN.
Thank you very much, Dr. Sere. Let me try and bunch a few questions now. There's a lot of questions around risks and challenges. So there's one around, what's this one? Sorry, bear with me. Although making a technological revolution, some issues and challenges are ahead. And some of the bigger problems around trust, low transparency, security breaches, certain customer habits, how can we overcome this? Another one around risks would be, how do we cope with fraud, privacy, data theft? There's some themes here. And what can ASEAN do or should do to address these issues? If there's another one, fintech is growing, but what is the strategy to eliminate and reduce the risk? So I'm mindful I've just outlined a number of risks that the audience have raised here. But again, maybe I open this up to all of you to share your perspectives on how severe these risks are and what ASEAN leaders could do about it. So floor's open.
Maybe let me take a stab at the last question. When we say fintech is growing as fast as scammers, I would say that fintech has expanded the canvas of providing financial services. Hence, the scammers have also expanded the canvas. So it's a relative term, not an absolute growth disproportionate to the expansion you're seeing. It has gone bigger because the canvas is not much more expansive. If you unravel that question, and the second part of the question is, they know everything about us. Well, you can only provide financial services if you know somebody. That's called know your customer. So more you know your customer, better you provide appropriate financial services. So it is not something you can eliminate. It is a necessity to know your customer. And the real question is, how do you protect this data from being abused? How do you protect this privileges being abused? I think that's the reason I want to take the discussion back to, in ASEAN context, the need for foundational digital infrastructure, which in fact Brunei and Cambodia worked with Singapore and Ghana and Nigeria and Kenya on a paper called Foundational Digital Initiative. FDI, a paper is out in the public domain. Let me instead of trying to solve the issue at the distribution point, let's solve the issue at the foundational point. Let me re-explain that again. We got to have a trusted digital ID protected by the state, or and some countries that they may debate. It could be a self-sovereign ID. And the data associated ID must be protected. It must have a governance structure where such data being exchanged is well thought through electronically from a consent, governance, and being obligation of third-party access data. So you need that foundational infrastructure, almost like in a physical world, you got to have roads, airports, police system to manage all this thing. In a digital world, we need that foundational infrastructure, which is the data rails, the payment rails, the consent rails. And we cannot get into this romanticism by a lot of fintech saying that, let's give you access to everything. Give me access, I can do magic. No, you cannot do magic. You've got to rely on common rules, and that rule can be only solved by building digital infrastructure. If you don't build that infrastructure, it will be a patchwork at the front. So, and that will not serve anybody. Fintechs will benefit if we have a public eKYC systems. Fintech in Singapore, Grab, and banks both are able to access the same eKYC infrastructure. So fintechs will be able to access that infrastructure as a shared utility. So you got to think about common shared utility across ASEAN, connected, and then try to solve this problem rather than doing a patchwork at the front, which will not solve.
Thank you. Anybody else want to come in? I see Calvin.
Yeah, I'll take a quick shot at this. I mean, I absolutely agree with the need for foundational infrastructure. That's going to be a game changer should it ever come to play, as we've already seen in some countries. But more interestingly, I would say, I flip it around. Let's take another perspective on this. 90% or 85% of fraud scams from a consumer and an MSME perspective generally emanates from consumer and business behavior, right? Generally because someone shares their password, says something to someone else, puts their password as 1, 2, 3, 4, 5, 6, 7. Those are the key reasons as to why that's the case. That being said, and establishing that as a caveat, the truth is there are three ways of addressing the key risk. One is preemptive, one is incident response, and the third one really is educational. And I believe that what it takes when we go into a full-fledged fintech kind of incursion into the markets is you need a robust preemptive cybersecurity capability, which there are not many in the region. At least most large cybersecurity companies with that capability do not sit in ASEAN, and to some extent the businesses are not large enough to justify the kind of preemptive capabilities to be built into a lot of the stacks. That's it. The second bit, which is incident response, is also a cost to the companies who are running this, right? And therefore, we need to have a larger pool in order to be able to justify the first two. And then the third one, as you roll this out, there needs to be a concerted collaboration with the regulator and the government in general to educate the individuals in terms of how they shouldn't behave. I know there are some programs, and I know that there has been attempts, but there will always be the marginalized cases of people using 1, 2, 3, 4, 5, 6, 7 as their passwords, or providing their passwords, or taking a screenshot of their IDs and sending it to their friends, right? So if you have those three pieces in place, generally it will be a continual race against hackers and scammers till the end of time. Is the way I'm thinking about it.
Great, thank you, Kelvin. Anybody else want to come in on this question, or there's a couple more that we need to address? Anybody else? Okay, let's move on to the next one. How can we ensure that less developed countries can keep up with others in Southeast Asia? And again, the point around the challenge of digital identity was raised again. So I think this is around inclusion, shall we say, between countries rather than within countries. Any thoughts on that from the panel?
Sorry, we didn't get the question again.
The question was, how can we ensure that less developed countries can keep up with others in Southeast Asia? This might be a challenge to digital identity, is the exact question. But I think for me, I think it'd be interesting to get perspectives on kind of, if you like, inclusion between countries rather than within countries as well. And how can we kind of leave no one behind, as many of the speakers previously have mentioned?
I think Sarah is the best example to actually answer this question. She has done it, dusted it. So let's ask that question to her.
I thought so too.
Always throw the hardest questions to the only lady on the panel.
By your kind panelist.
Well, I think starting off with the foundational stack that Subnandu mentioned would be a good beginning for developing country. And I think most of the struggle that we face generally is that we may have a lot of things happening at the same time, and it become very fragmented. So in the case of Cambodia, we have the digital ID that is under one authority. We have the data exchange under different authorities. We have the payment under another authority, the central bank. And then we have so many others that are so fragmented. And so I think to be able to understand, what is needed to bring all these together is very important, and that's why we look at example like in Singapore and other country. So by working on the foundational stack that Subnandu mentions on digital ID, on consent, on interoperability of the payment system and data exchange, in a way sort of help us better understand, where we stand and where we want to go, and just having this clear sort of roadmap is helpful. The second, I would say, on cross-border data, and of some of the rules that come out of it. It's when you're in a region, when you exist in a region where everybody else is running, you can't just keep walking. You also need to run. So I think among ASEAN countries, sharing the knowledge, sharing the experiences, sharing the data would be very important to lift everyone up to similar level.
Great, thank you so much. And Dr. Seri, a perfect segue to the other question that was posed, which was around this cross-border element. Would the panelists please share your thoughts on how fintech solutions must or could be interoperable across jurisdictions to achieve the end goal of economic integration and a common market for ASEAN? Does anybody want to come in there?
I think that's a good question, and I would always say interoperability has got two things: interoperability in moving money and interoperability moving the ownership of a contract, because that's ultimately the ultimate nirvana of a interoperability, that you can move money in the most seamless way and move product execution in the most seamless way. Now, interoperability relies on technology on few things: standards, gateways, switches, and some regulatory support, so that there is a common recognition of certain standards across certain data elements across the border. So there has to be certain regulation which recognize across ASEAN respective digital IDs. There has to be some regulation in understanding that the way KYC is done, which I think largely solved across different entity. And then there has to be interoperability of the system, so that systems are connected, they can talk to each other. And I'll also argue here, you don't need to have same standards and same, if you have switches who can translate for you and move things across. A good example would be things like payment gateways. They're an excellent example where two countries with different standard can switch each other and move money efficiently. You don't have to burn the ocean to build common standard, which sounds good from a bureaucracy perspective, but may not be most efficient. And the last piece on interoperability is to me, and I would say, is a whole set of challenges around the endpoint experience. Because for example, I'll take a real example. When Singapore and Thailand connected the payment system, or wanted to connect the payment system, we wanted to ensure that the endpoint experience is identical. Let me explain that a little more. In Singapore, we move money between each other in banking services in 3 clicks, just knowing each other's mobile phone number, called Pay Now. We wanted to have the same experience if somebody sends money to Thailand. I need to know somebody's mobile phone number in Thailand. Can I move money in 3 clicks at the most cost-efficient way? In Singapore, it's zero cost when you move money from A to B. Now, to do that, it took us 3 years to connect the system just to execute the exact same user experience. We have to solve for common policies around AML KYC, sanction checkings, standards, common gateway, switching messages. All this hard work goes just to deliver an identical experience in both sides. So to summarize everything, identical experience at both ends, creation of switches, gateways, which can move information in an interoperable way, and some policy coverage support on consumer protection, privacy, and trust and legal framework to recognize digital data and identity.
Great, thank you so much. I don't know if Adrian or Kelvin want to come in on this question. Adrian, I know you dropped off for connection issues, but the question was around whether fintech solutions must or could be interoperable across jurisdictions, so as to achieve the goal of economic integration and a common market within ASEAN. So maybe Adrian, over to you first, and then Kelvin.
Yeah, let me try to share our experience. In Vestry ourselves, we're operating in 3 countries: Indonesia, Thailand, as well as the Philippines, right? So based on our own experience, it's very challenging to achieve that common interop amongst the countries. I think, as Sopnendu mentioned, there are some regulatory standards in each country. So having an entire same platform, it's going to be a challenge. I think that's where the tech angle is important, to be able to have customization for each country. And I think that is where technology plays a critical role in developing a infrastructure where it is quite easy to connect interoperability, but also it's very modular, I think, and open. I think those are some of the key points, because there will be local regulatory standards. You need to adjust some of the standards of your general product. So for example, we do mostly working capital finance, supply chain financing, invoice financing. In general, it will look the same, but there are some parts, some parameters that we need to adjust based on local country regulation. And that's where you need to have the right tech architecture to enable you to do that. I think that relates also to the issue on talent, having the right talent for you to scale your business, not only domestically, but also globally.
Great, thank you very much. And Kelvin, briefly from you, okay. So Pendu, I'll give you the final word. Yeah, I'm painfully aware that I'm just on time right now, and I don't want to annoy the organizers. But maybe Kelvin very briefly, then so Pendu, final word to you.
It's okay, so I tend to be very quick on this. So Somnendu has already established the difficulties in doing this, right? What I just want to bring out one level to ask is the political will in ASEAN there to create this capability? If there is, then making it happen is effectively a matter of effort and time. Now the question is whether or not that's something that's high on the agenda of the regions. Perhaps it is, perhaps it isn't. Sorry, Somnendu, back to you.
No. I was saying Adrian brought a very important point. I call it undiscussable, but given he has raised it, I will talk about it. It's about the tech risk management, because a lot of time we don't discuss this. The real issue of interoperability is the ability for regulators to approve a particular tech stack, and the tech architecture and the tech risk, perceived tech risk, whether cloud computing or whether using APIs, and that becomes a real on the ground interoperable issues. A lot of fintechs face, and this is an undiscussable because it takes a lot of time to recognize that's an issue.
Great, thank you so much, all of you. And my apologies, I'm 2 minutes over to the organizers. But let me just conclude by huge thank you to all the panelists. We really enjoyed the conversation and your insights as well. It's going to be impossible for me to summarize all of that, but just some of the key points on the topic of fintech for an inclusive and sustainable ASEAN. I think Dr. Sari mentioned this importance of an opportunity to engage, particularly women and the informal sector. And again, I think equally more women in the fintech sector working on this agenda as well. I know Dr. Sari is the only woman on this panel. Maybe that will be different next year. I think Somnendu mentioned all the challenges and around distribution, instrumentation and manufacturing. So we're doing well, but there's still plenty more to do. I think Adrian mentioned this really important point around collaboration. And the importance of collaboration between fintech and different tech providers and combining different solutions. And I think Kelvin ended it very well by saying that the only way we can move this all forward is with political will. So I think that ends with kind of the key message to ASEAN member states and ASEAN leaders is that if we are to harness the potential of fintech for an inclusive and sustainable future, it will need their backing. So I will end there. Thank you all again to the panelists. Thank you to the audience. And Jenny, let me hand back to you now. My apologies, I'm 3 minutes over. Over to you.
So again, Jonathan, thank you so much. We were very impressed with his time management skills. Ladies and gentlemen, we're about to transition now to our very next important discussion on financial literacy. But ahead of that, we do have a very short 2-minute video by our platinum sponsor, one of our platinum partners, Standard Chartered Bank. We'll see you in a few minutes' time.
ASEAN is made up of 10 diverse markets, uniquely positioned at the heart of global trade routes. Home to a rapidly rising and affluent middle class, with one of the fastest growing digital landscapes, manufacturing hubs and abundant natural resources. ASEAN's strong fundamentals are driving its growth and resilience. With our knowledge and insights on local markets, Standard Chartered can help you accelerate your growth and navigate the complexities of each market. As you expand across ASEAN, we can support you with end-to-end solutions, streamlining processes across multiple jurisdictions, making it more efficient for you. We are leading on the ASEAN regional connectivity to integrate trade and payments in the region. To support the growing cashless ecosystem, we've digitized our cash management. From virtual accounts to a wide range of APIs, we've optimized digitization for your transaction and reporting needs. We are investing in fintech solutions and building new business models, creating efficiencies and better experiences for your customers. when it comes to working across ASEAN's supply chains to finance your imports, exports or inventory, and raising capital for your business, our award-winning capital market solutions are customized to your needs. As you expand outside your home market, our dynamic hedging offering helps your treasury team manage volatility, ensure price consistency, and deliver competitive margins. We're committed to promoting economic and social development in our markets. Our value and philosophy are embedded across our banking products and practices. With $75 billion committed towards sustainable development goals, we can help your business make a positive impact. ASEAN's future is bright. As your trusted banking partner, we are committed to supporting your growth ambitions, co-creating innovative and winning solutions with you. We are Standard Chartered. We are here for good.
Ladies and gentlemen, our next panel discussion is on the role of financial literacy in ASEAN's economic prosperity. We shall be leading with a scene-setting address by the chairman of the Brunei Darussalam Central Bank, Yang Mulia Datuk Sri Paduka Awang Haji Ahmadin bin Haji Abdul Rahman. But for this session, we'll be handing over to Dr. Elizabeth Oy, the Senior Lecturer of Finance, University of Western Australia in Perth, who's our moderator for our final session with speakers based in Jakarta and Tokyo and also right here in Brunei. And Dr. Elizabeth's area of expertise is in financial literacy and personal finance. She's also worked in financial services, has been a consultant to the Organization for Economic Cooperation and Development, authoring several OECD policy reports. Dr. Elizabeth, we can see you.
Thank you, Jenny. Good morning, everybody. I'm delighted to be your moderator for this important discussion on the role of financial literacy in ASEAN's economic prosperity. And if I can just briefly share my thoughts before we hear from the panel, what I think is most important about financial literacy is the fact that it is evolving so quickly. This morning we've heard about the importance of fintech, which means that we now need to incorporate digital financial literacy into our existing financial education programs. On top of that, we know that it is important to adopt financial education into the local context. So, for example, we'll talk about Islamic financial literacy today and the importance of that in ASEAN. And even just our understanding of how to measure financial literacy, what it's determined by, its potential influences on other things is also maturing. So in this panel, we'll talk about some of these issues and the overall aim is to be able to contribute to policy development in Brunei Darussalam and the ASEAN region more broadly. So as Jenny said, we're going to begin with hearing from the chairman of the Brunei Darussalam Central Bank, Dr. Haji Ahmadin bin Haji Abdul Rahman, to set the scene for us. Dr. has been called to the same meeting as the Minister of Finance and Economy too, and so he has kindly recorded his scene setting for us. Could we have the scene setting, please?
Bismillahirrahmanirrahim. Honorable Datuk Seri Setia Dr. Haji Muhammad Amin Liu bin Abdullah, Minister at the Prime Minister's Office and Minister of Finance and Economy 2, Haslina Taib, Chief Executive Officer Dynamic Technologies and Chair of the ASEAN Business and Investment Summit 2021, distinguished speakers, panelists, and participants. Ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh, and very good morning. It is a great pleasure to be here with you today, though virtually. First, I would like to appreciate the organizer for highlighting an important agenda not only impacting ASEAN, but also globally. Financial literacy continues to be prioritized as a digitalization and digital transformation in light of the COVID-19 pandemic has positively impacted fintech sectors such as blockchain, artificial intelligence, and data analytics in finance and cybersecurity. Governments around the world and here in ASEAN recognize that having a financially literate population that has access to appropriate financial products with relevant consumer protection benefiting households, businesses, and the overall economy. As such, financial literacy has become a pronounced topic of discussion and a fundamental policy theme both domestically and across the globe, thus promoting financial inclusion and improved access to finance. ASEAN also acknowledged the importance of financial literacy as an essential ingredient to improve its financial inclusion level. This has been envisioned as a pathway to enhance economic growth, to alleviate poverty, and to reduce income inequalities. Ladies and gentlemen, financial literacy, broadly defined, is a combination of awareness, knowledge, skill, and behavior that allows an individual to make informed and effective decisions, such as managing financial resources effectively, financial planning and investment, assessing the risk, and etc. Financial literacy also plays a crucial role in economic recovery in times of crisis. For instance, during the current COVID-19 pandemic, many have been forced to adapt to the new norms. This includes becoming more flexible with their finances. Those who are more flexible, those who are more financially literate will make better and prudent financial decisions and have the opportunities to navigate a path towards financial recoveries. This has not only further emphasized the importance of financial literacy as a life skill, but has also shed a new light on financial well-being and financial resilience. Data from the International Survey of the Adult Financial Literacy collected before the pandemic shows differences in people's financial resilience. For example, whether one has sufficient saving to cover life unexpected circumstances. The pandemic has affected consumers' financial situation from widespread economic downturn and reduced economic activity that led to unemployment and increased financial frauds and scams, which often targeting the vulnerable groups such as MSME, children and young people, seniors, and those digitally excluded. This opened the eyes of both individuals, businesses, and policymakers to enhance preparedness against adverse financial shocks, and we all play a role to provide them with the tools to recovery. On the flip side, this pandemic has given us opportunity where businesses have started to move toward digital platforms such as e-wallet, e-remittance services, and peer-to-peer crowdfunding platform. It is also allows innovation and better understanding of customers and their needs and faster and wider dissemination of information. Combining this with an increasingly tech-savvy generation with wider access to the internet, such innovation can reach previously excluded groups, including the vulnerable, the unbanked, and underserved. This can lead to better accessibility to the financial sector and contribute to growth and development that is more inclusive. Ladies and gentlemen, our shared goal of financial integration for a stronger ASEAN Economic Community 2025 focuses on three main strategies. These are strengthening financial integration, promoting financial inclusion, and ensuring financial stability. Efforts have been undertaken by ASEAN collectively to support and accelerate financial inclusion initiatives in the region. At present, many of the ASEAN members have put in place their national strategies on financial education, which emphasizes the development and dissemination of financial education material and information, consumer engagement and outreach, as well as monitoring and evaluating its effectiveness. In addition, under the ASEAN Working Committee on Financial Inclusion, with the collaboration of several international organizations, has published a number of guidance notes on financial education and consumer protection, and on digital financial services, with policy notes on digital financial literacy will soon be published. To signify the importance of financial literacy, the members are committed in celebrating the ASEAN Saving Day every 31st of October commencing last year. The committee also emphasized on capacity building and peer learning. During the 7th ASEAN Finance Ministers and Central Bank Governors meeting, it was endorsed, among others, under Brunei Darussalam 3 Priorities Economic Deliverables, to convene ASEAN Financial Literacy Conferences as a means of enhancing financial literacy and financial inclusion, which are key components in ensuring sustainable and resilient economic growth. Although ASEAN member states are at different stages of financial and economic development, I believe this is one of the ASEAN strengths. This blends well with this year's ASEAN theme of we care, we prepare, we prosper. With ASEAN diversity, we are able to learn more on the specific challenges faced by each country and understand what works well in their unique experiences. Together, we work closely in developing strategies to enhance ASEAN priority as a whole. In Brunei Darussalam, we view financial literacy as an important component to achieving our national vision of Wawasan Brunei 2035, recognizing the cross-cutting issues in raising financial literacy. A holistic multi-agency approach was necessary to achieve a broad-based outcome. In 2017, the National Financial Literacy Council was established, where members are from relevant government agencies and private sectors from various financial industries. By simply conducting financial literacy initiatives is not enough. Monitoring and evaluating of such initiatives is also necessary. Therefore, the Council has implemented a framework to measure and analyze the success of financial literacy initiatives, which allows the Council to better understand key success factors and provide improvement recommendation to bridge any gaps. The Council also recognizes that it is vital for financial education to start from early age. In April 2021, the Brunei Darussalam Financial Literacy Competency Framework for Primary School Students was published, which contains a different financial theme while identifying a set of knowledge, skill, attitude, motivation, and behavior required at different age groups. Meanwhile, the Council is also working on launching a financial literacy website that houses all relevant financial information and advice adapted to Brunei context for a greater outreach to the public. Ladies and gentlemen, the Brunei Darussalam Central Bank, BDCB, also plays an important role in complementing financial literacy initiatives in the nation. Guided by the Brunei Darussalam Financial Sector Blueprint 2016 to 2025, the BDCB identifies opportunities in the effort toward developing the financial sector as the enabler of economic growth. Ladies and gentlemen, despite the effort in promoting financial literacy in ASEAN, we should always be worried of possible challenges ahead. With finance and technology evolving fast, we must be just as quick, or if not faster, in adapting to these changes. We must also be aware of the new and emerging areas. For example, sustainable finance, as more of our ASEAN members states are focusing on building better post-COVID-19, which means a greener and more sustainable-oriented financial sector. Hence, we must never be complacent and continue to be agile in responding to any opportunities and risks that may arise. Further, we must bear in mind that although carrying out the financial literacy initiative program is necessary to raise financial literacy, it is still not sufficient. The financial environment must also be conducive in order to encourage positive financial behavior. For example, it is imperative that the financial service providers to be more proactive in ensuring that the financial product and services offered in the market cater to the needs of different groups, and no group, especially the vulnerable, is left behind. Finally, the role of the government and the private sector cannot be emphasized enough. Close and effective collaborative is necessary in order to ensure that the financial literacy reaches all target groups. The private sector must also be mindful that when conducting their financial literacy initiative, that the line between promoting financial literacy and marketing their own financial product and services has to be clear. Financial ignorance is costly and detrimental to individuals, households, and businesses impacting the economy. Those who are financially literate will be able to plan more effectively, take advantage of the financial services, and be more financially resilient in the face of crisis. The focus is to ensure that we equip our people, our businesses, and our ASEAN for success. I hope that today's panel discussion provides insights of the development of the fintech and financial literacy and better equip ourselves for any future challenges. All the best and thank you very much.
Thank you to Dato, and we will expand on some of his remarks with our panel. Before I introduce our panel, given that Brunei is chair of ASEAN this year, the discussions today will be fed back into the Brunei Central Bank to help develop their priority economic deliverable on financial literacy and policy planning. So I do look forward to our discussion. Let me at this point introduce each of our panelists, and in the interest of time, I'm only going to briefly introduce their background, but please do refer to the website for a full profile on each of them. Our first panelist, Bapak Imansyah, has worked with the Indonesian Financial Service Authority, OJK, since 2013. And as of November 2020, he is the Deputy Commissioner of OJK Institute and Digital Finance, responsible for capacity building for the financial sector, including research and digitalization in the financial sector. Our second panelist, Peter J. Morgan, is Senior Consulting Economist and Vice Chair of Research at the Asian Development Bank Institute and has been with ADBI since 2008. He has 23 years experience in the financial sector in Asia, and his research interests include macroeconomic policy and financial sector regulation, reform, financial development, financial inclusion, fintech, financial literacy, and financial education. And our third panelist, Yang Mulia Haja Noraini Haji Sulaiman, is currently the Deputy Managing Director 1 of BIBD. She was previously the Chief Financial Officer for BIBD and has held other accounting and financial roles in various Bruneian companies such as Brunei Shell Petroleum. She is also a member of the Brunei Darussalam Accounting Standards Council. Thank you, Bapak Imansyah, thank you, Peter, and Noraini as well for joining us in this panel. We will begin our session with hearing some opening remarks from each of our panel members, followed by some questions that I would like to ask the panelists, and finally some questions from the audience. And can I just take this opportunity to remind our audience members, if you do have a question that you'd like to post, if you could specify who the panelist is you would like to hear from to direct your question, that would be much appreciated. So, Bapak Imansyah, can I hand over to you first to hear your opening remarks?
Okay, thank you very much for the opportunity. Good morning to all, and thank you as well for it's a great honor for OJK to also to attend and participate in this event. So with regard to this the topic that we want to discuss this morning, I think before that I just want to regard as well, excellencies, ladies and gentlemen, sorry, moderators and participants, and panelists as well. I can see here Peter and also Ms. Noraini Sulaiman. So it's a great honor for OJK again to attend and participate in this event. With the topic that we want to discuss this morning, it's talking about the financial literacy and financial inclusion, which is a big agenda as well for OJK actually. So since I joined my new assignment coming from the Board of Commissioners, I'm becoming more intensively engaged with the issue of the fintech as well as the digital financial inclusion in particular. So with regard to this agenda, with the initiative on digital finance innovation in particular for OJK, since January this year, we issue already like what we have like a master plan for the financial sector here in Indonesia with duration 2001-2025. And one of the pillars, we have 3 pillars of this master plan, and one of the pillars is actually talking about the acceleration of digital transformations in the finance sector here in Indonesia. So it's very much very clear the directions coming from the Board of Commissioners that we have to do something that expedite ourselves. How, as a regulator for the financial sector, we do facilitate the adoptions of digital financial in particular in the way of fintechs doing their business in our financial sector. So from the supply side, as a regulator, we come up with like a policy directions already, and it was not only with the master plan, but in particular for the financial sector, we do also issue like a guideline for upscaling the capacity of these financial sector resources in doing their business. So something that we do have like directions, clear directions in the future, how we are tackling the issue of financial inclusions and financial literacy in particular in the area of digital, in the area of fintech in particular. So I have a lot of opportunity actually discussing about Indonesia, and in particular, I always come up with like an idea where Indonesia is very unique, right? I think Pak Adrian mentioned in the first session that Indonesia also very special, and for me it's very unique because compared to other countries in the region, in the ASEAN region, we do have like 70,000 island and most like 250 million people. So it's a huge market for us actually in terms of how we are tackling the issue of fintechs in our financial sector. So, and also the financial literacy and also the financial inclusion because of this structure, the geographical structure of Indonesia. So I think we do have like we want to be very concerned with this financial literacy and financial inclusion. And from the beginning, I think I have the figure of the survey of digital of these financial literacy and financial inclusions done nationally. So we have the number of 2019. The financial literacy index is about 38%, and the financial inclusion index is above that figure, is almost 80%. But the number is keep increasing every year. So from like 2013, we only have like 22% of financial literacy and only like almost 68% of financial inclusions. But at the end of 2019, we have like I said before, the number is quite the increasing of the number is quite significant. So we do have in the future we can like have what is it, the number of the figure of this financial literacy as well as financial inclusion becoming even bigger. So this is something that is very common for the financial sector. So when we go into the digital financial literature and inclusions in Indonesia, so in terms of financial literacy index, we have like 36%, and the financial literature, I think we have like 31 or 32% as of 2019. So it's still, you can compare that in the area of digital finance, we still have a lot works to do in the future, and for sure it's a huge challenge, and it's a huge task for us to ensure that the public really understood about how they can benefit from the digital finance services, because as in the morning, I think I can follow the discussions. We do have like two big area. One is the P2P lending, and one on the payment, that really covering a lot of the features of our digital finance here in Indonesia. So that's really one of the idea that we do have like a lot of homeworks in the future for how we are increasing our digital finance literacy and also inclusions. But for sure that the government always come up with like a very good initiative, and we follow the direction from the government. Just recently, government initiated for the project management office for digital economy, and one part of the digital economy is also for the digital financial literacy and also digital financial inclusions. Aside from what we have from the survey, we have also set up already what under our regulations, what we call is OJK Infinity. OJK Infinity is something that it's like a sandbox. It's something that we have like a venue that everybody can discuss about the business model of the digital financial innovations. So within that OJK Infinity, we set up also, we develop a digital financial curriculum already. So we have a lot of communications with the Minister of Educations, and also we develop as well a fintech center with universities. This is the effort that we want to have like more broad understandings of not only the regulators but also the universities and government officials, government entities that talking about the fintech within our financial sector. So within the OJK Infinity, we also have like I mentioned before, like we have a sandbox that everybody can submit and can report to us, and we discuss about the business model, how they set up the risk management, how they set up the data protections, who are the management and where they are located. All those things will be very much we discuss within our OJK Infinity, and including as well capacity building. For ourselves in particular, because it's like a new frontier that we want to know more about the business model and what happened in the real sector. So I think to some extent, our staff also learn from the fintech players how they can understand well about the business model of this fintech player. On the other side, we have also like digital financial literacy media. So we have a lot of collaborations and cooperation with IMF, with the World Banks, as well as with the Asian Development Bank to set up like a program, namely digital financial literacy program. So we have like a what is it? Ebook, something that we can share through our website, and everybody can access and then learn about the fintech. And the other things that I want to share here as well. I mentioned I'm attached to the OJK Institute, so we also develop as well like a curriculum for digital talent. So I think when we're talking about fintechs and how we can go further with the digital financial literacy and digital financial inclusions, so the one that we want to have also how we are preparing for more digital talents provided in the industry. So by doing this, I think it will benefit for Indonesia in particular for having more digital talents available in the market. So meaning that the way to support the digital financial literacy as well as the digital financial inclusions not only relies with the regulators, but also we can ask more participation coming from the market players. So I think that's what I can share in the beginning for as introduction, and also as a something that we can share later on and we can discuss during the Q&A session. So I'll stop here. Back to you, Elizabeth. Thank you very much.
Thank you, Bapak Imansyah. Peter, can I hand over to you for your opening remarks, please?
Thanks, Elizabeth. I'm delighted to participate in this very important event, and I'd like to thank the organizers for inviting me. We at ADBI have been very interested in the areas of financial inclusion and financial literacy, and more recently, fintech and digital financial literacy as ways to promote informed financial inclusion. Mr. Mansa's remarks have sort of very nicely led into my intervention. I wanted to talk a little bit more in detail about digital financial literacy, which we've been promoting. I think digital financial literacy covers knowledge in four main areas. Our first would be the knowledge of fintech products and services, their benefits and drawbacks. And within the fintech area, of course, it's quite broad. You have payments such as e-money, mobile phone wallets, crypto assets, remittance services, asset management such as internet banking, online brokers, robo-advisors, crypto asset trading, personal financial management, mobile trading. And then there's the area of alternative finance, such as crowdfunding, peer-to-peer lending, online balance sheet lending, etc., and other services such as internet-based insurance or insurtech. So that's the first aspect. Then the second aspect is what are the new kinds of risks which are associated with fintech's products and services. Risks such as phishing, identity theft, unauthorized use of personal data, and also excessive debt can be a problem. One of the side effects of fintech lending services may be that it's actually too easy to build up debt. The third issue is ways to protect oneself from these risks. And finally, the fourth aspect is methods of redress if consumers experience losses or other damages from such risks. Now, digital financial literacy can be promoted in various ways. I think the very first step would be to develop and implement tools to measure digital financial literacy. So far, as I'm aware, there have been a number of different kinds of surveys to measure conventional financial literacy, but I'm not aware of any surveys which have actually measured the extent of digital financial literacy. The next step would be to develop a digital financial education strategies and programs to establish guidelines for the inclusion of fintech and big tech companies in national financial education strategies. And our particular suggestion is that we would recommend that fintech and big tech firms be required to provide a certain level of digital financial education to their customers, especially disadvantaged groups. Certainly, fintech and big tech companies, I think, are extremely well placed to develop these kinds of educational materials. The next point I would emphasize is that when you're looking at disadvantaged groups, it's unlikely that online digital financial education would be sufficient. You probably need some kind of a coordination of online and offline models to be included in the national financial education strategy, some direct involvement, for example, of NGOs in education programs for disadvantaged groups. The next stage is to develop frameworks to monitor the efficiency of digital financial education strategies. And then along with that, I think it's necessary to extend consumer protection schemes to cover fintech products and services. So let me stop there. Thanks very much.
Thank you, Peter. And Noraini, can I please hand over to you for your opening remarks, please?
Thank you, Elizabeth. I'll be talking a bit about financial literacy in the Islamic space. So let me start by just saying about Maqasid Sharia, or the goals of Islamic law, which is aimed to preserve the well-being of the individual and society with its established or known objectives for the preservation and promotion of religion, life, lineage, intellect, and also wealth. So the ethical values of Maqasid Sharia are also very much aligned to what we know today as ESG and the United Nations Sustainability Development Goals. So whilst we were looking at the UN SDG, the similarities which has been struck by both Maqasid Sharia and also UN SDG was really enlightening to us. So within the financial sector, emphasis has grown from purely enhancing shareholder value, which is traditional measures of financial performance, towards enhancing stakeholder value. Now it's looking to also include meaningful and also responsible values to society. Certain academics have also opined the objectives of Sharia in financial transaction to broadly include the circulation of wealth, encompassing creation, consumption, and also its redistribution, fair and transparent financial process, and justice to the individual and society. So these interconnectivities, which nicely go into the second and also fifth pillars of the Maqasid Sharia. So the the one on life, for example, is basically looking at the basic ones, for example, for security, and also providing to the environment, basically, for example, land, sea, and water. So again, there is also a lot of similarities from the Maqasid Sharia view and also to the UN SDG. The fifth pillar, which is also, sorry, I've lost my notes here. It's gone on to sleep to me. Sorry. The objective of the preservation of wealth within Maqasid Sharia also is meant to avoid poverty, gainful halal income, and also respectable standard of living. It also is to ensure the maintenance of a respectable Muslim lifestyle, promoting halal income, and also the redistribution of wealth via zakat to its rightful recipients. So the objective of Sharia and the financial transaction enables cohesive alignment, inclusive socio-economic growth with the principles of fairness, transparency, and public interest, which also will also take into consideration not just financial gain. So from an Islamic standpoint, financial literacy is critical, needed to fulfill one religious obligation. Within the Quran, Surah An-Nisa, Ayat 5, there is emphasis on ensuring that one has adequate understanding of the use of resources, making sound judgment, and not to consume wastefully. So the direct translation would be, do not hand over to those who are weak of judgment, the property of which Allah has entrusted you for their support, but let them have their sustenance and clothe them with its proceeds. So from Islamic perspective, financial literacy should have the following benefits, which is the increased knowledge within Islamic finance, leading into economic stability with the prohibition of usury and maisir or speculation, financial awareness for financial products linked with the real economy, as Islamic funds are used to grow real economic activities, and also encourages the use of financial products, but also one needs to be aware of the risks related to them. On a Brunei level, so financial literacy has actually been addressed at the highest level. So His Majesty himself has taken a great interest in this. In his New Year Tita some years ago, he has highlighted the responsible spending by the government, household, and also individuals. And as mentioned by Dato' just now, even the central bank in its financial sector blueprint has also included raising financial literacy standards and raising public awareness, and also instilling financial discipline. The first financial literacy survey was commissioned by the central bank in 2015, and that has resulted to 4 pillars. I think this is very much similar to other countries, which is an increase in financial education. But of course, now I think not just the traditional education, but one also needs to understand the digital financial education, which is very much prevalent. Information, financial information and advice. So again, the central bank has played quite a bit of a role, where they have been promoting National Savings Day since 2015, and I believe that has also been positive with increased savings that we see from a financial sector. So the third finding was on institutional design. I think there was also certain regulatory steps which had to be taken by the regulator. For example, introducing the total debt service ratio in 2015 to instill financial discipline. And we have also seen, I think that has worked. I think in 2011, the total household debt to the total loans in Brunei was around nearly 60%, and that has gone down to around 48% around the first quarter of this year. And the regulators have also taken that active role to ensure that there is enough information for the consumers to take their decision. For example, with the introduction of the notice of market conduct for greater transparency to consumers. Of course, the governance and also evaluation, I think Dato also mentioned about the establishment of the National Financial Literacy Council for Brunei. And I think they are currently preparing to actually do a third financial literacy survey, of course, to measure what has been working over the last two financial literacy surveys. Interestingly, there has been a rise in Brunei, where Brunei-based individuals using digital means such as social media accounts to promote personal finance and investments or financial literacy. These accounts, alhamdulillah, I think they were also managed by certified financial planners. But this is interesting to me because this is the increasing interest, which is to share from a public point of view to increase financial literacy amongst the general population of Brunei. Elizabeth, that's it. I give it back to you.
Thank you, Noorani. I do have some follow-up questions for each of our panel members, but I suppose we'll keep this segment quite brief so that we still do have some time for audience member questions. If I can come back to Bapak Imansyah, you mentioned the OJK Infinity program as a way to support digital financial literacy and also digital financial inclusion, and obviously they are key priorities for many countries around the world, particularly in ASEAN. Can you tell us more about the priorities of OJK going forward, other than digital aspects of financial education and literacy?
Yeah, thank you for the questions, Elizabeth. I forgot to share as well that our mandate, according to OJK law, is not only doing the oversee for the financial sector, but also we have like one mandate for the customer protections, right? It's something that when you try to undertake that our mandate for the financial for the customer protections, one instance that I want to share with you is we do have a lot of complaints coming from the people that about the protections for them because of this what we call this illegal fintech P2P lending. So because of the quite low the understandings about the this business process and there's something that then they just have like an offer coming from this illegal fintechs lending, online lending, right? So they just click their mobile phone, and what happened is this fintech, this illegal fintech lending, according to ourselves, define that because they are not registered and they're not licensed by OJK. So what happened is the customer just click the features that offered by this illegal fintech lending. So what happened is they can access not only the contact number of the customer itself, but also all the contact number within that mobile phones, right? So and they contact also they can what happened is there is like a delay in payment, repayment for this facility taken by the customer. They just this share the information through all the contact number within that mobile phones of that so it's not it's undue actually activity done by this period. So in the future, I think one of the homeworks that we consider is again in terms of financial literacy. So we have to do something like more educations to increase the understandings of people how they interact with this illegal fintech lending. So and what features, and if they are offering that they have to click all the features that are according to our standard, so they have to refuse and reject that offer coming from the illegal fintech lending. But it's a huge, it's a big challenge for us because we can cover like cities, but with rural areas, it's a big challenge for us as well because sometimes this player, this fintech, illegal fintech lending, also try to offer the services into rural areas. And we have, I mentioned in the beginning that we have this 70,000 island. I don't know how, covering all the areas, but anyway, that's a big challenge, and we're going forward. And we have like a special task force. It's a collaboration with the government, other government institutions like the what is it, with the governor of central bank, because it's also talking about payment services. So, and it's something that, and also the Minister of Information and Technology. So meaning that if there's like illegal fintech lending that being registered by them, if there's not registered by the OJK, they have to tackle down that fintech lending from the market, from the e-commerce and the market players. So that's really the big challenge for us in the future. But I think I mean, this is a ongoing effort. It won't stop until you have this, let's say your financial literacy index already reached about 100% or 90 something percent, but it's an ongoing effort just to make sure that your people are protected from the illegal undue activities from the fintechs players in the market. Thank you. I stop there and back to you, Elizabeth. Thank you.
Thank you, Bapak Imansyah. I do see some questions coming through from our audience, but if you could please continue to post the questions, we will have time for audience participation. Peter, in your opening remarks, you mentioned there is a need for work on how to measure digital financial literacy as we evolve away from traditional financial literacy. So that certainly could present a particular challenge in incorporating digital financial literacy into our current financial education programs. Do you foresee any other challenges in incorporating digital financial issues?
I think the main issues involved in incorporating digital financial literacy are probably not too different from those involved with more conventional financial literacy. I think the gold standard for financial education is incorporation into the school curriculum, because that means you can reach the entire youth population and set the stage for future financial education development. But the basic problem is that you need a good program. The teachers need to be well educated. You have to find sufficient time to incorporate that into the curriculum. Even places like Japan, which have a well-developed financial education curriculum, there's still a basic issue of trying to find time in the overall curriculum, because of course there are so many different subjects that have to be covered. So those are very basic kinds of problems. So I don't think there's anything particularly unique about digital financial literacy, although of course it does overlap a lot with digital literacy, so that essentially you have to have all three. You have to have financial literacy, digital literacy, and digital financial literacy.
Thank you, Peter. And Naraini, you mentioned some key distinctions between Islamic financial literacy and how that is set apart from traditional financial literacy. And of course, it is important to do our best to raise awareness of Islamic financial literacy. What do you think is the best way that we can raise that awareness? Is it a matter of policy, incorporating it into policy, social media, tailored financial education programs? What do you think, from your perspective, is the best way to do that?
Thanks, Elizabeth. I think there's a multitude of ways to actually do it. And I think the most efficient and also wide-ranging would, of course, be from a fintech point of view and also digitally. So as I mentioned earlier on, of course, this is also depending on the fact that there is infrastructure to support the fintechs and also digital financial literacy. We can see even one of our subsidiaries are doing financial education via their social media, for example, via Instagram, so that there will be a lot more people who can read into it. Of course, the traditional ways are still applicable. I think Bapak Iman Shah mentioned about the number of islands in Indonesia. I think, of course, COVID permitting, hopefully the congregation in mosques or suraus can also be done to disseminate information from licensed practitioners. Of course, having the endorsement of the imams within those suraus or mosques, I think would give that faith in the people that it's authentic and can be adopted by people, albeit at a rudimentary level.
Thank you, Norani. I'd like to open our session now to questions from the audience. The first question that we have is for Peter on digital financial technology. The question is, how should we cater to older members of society when it comes to this issue? How do we promote it to them? How do we even find the best approach to target them?
Yes, I think that's a difficult question because they are probably less likely to be used to using online sources of information, and of course they aren't in school anymore. I think that may well call for the involvement of perhaps NGOs to actively go out into the community to try to reach these people, either NGOs or local governments might have some kind of program to reach elderly users. Now, if they do have online access, then I think that makes it much easier. Then you just have to try to tailor a program for them and somehow get them to pay attention to that program. But in any case, I think it's going to be a challenge. And again, it probably ties in a lot with digital literacy, that you have to improve the capacity of the elderly on the side of digital literacy before they can take advantage of digital financial literacy or financial literacy.
Thank you, Peter. And I guess another target group other than our older members is also our youth. So the next question is for Bapak Iman Shah. The question is, how can financial institutions support millennials in increasing their financial literacy? So what are the specific means to target youth?
Again, thank you for the question, Elizabeth. I think the way that we have like communications with the financial institution is already like embedded before, I think for years already, because with it. And then these incumbent financial institutions, they're having also these digital financial services through fintech or something. And then they are targeting also millennials. So the issue back to the very fundamental issues, how we are, doing the financial literacy and financial inclusions even for millennials. So I think from our perspective, the communications is key, right? So we have like not only with the incumbent, but the individual financial institution. We don't just do that things with these individual financial institutions, but we do as well like a collaboration with the associations. So we leverage on associations because I think these incumbent financial institutions also member of the association. So the way they're having the program for financial literacy for the customer, will do as well as a concern coming from the associations. And not only with the incumbent financial institution, but also with the fintech itself. We have a lot of association. I think in the first sessions, one of the head of this financial fintech association is also sharing its idea on how we are having this fintech works in our financial sector. So they're having also code of conduct. They're having also like what is it penalties for the members of the association. So we have a regular meetings, we have a regular communication with the fintech associations. On top of that, we also have like already established in our works years already, our communication with the incumbent. So hopefully that's something that will help us to increase the digital financial literacy, in particular for the millennials. But so it is also our target in the future that we may have like a I think we do a lot of webinar through our effort, our programs, and we invite not only financial sector staff, but also it's open for public. So hopefully by doing this webinar, I think this is a benefit of having also the IT right now. We have this opportunity to more have like more audience can participate in our program. So hopefully all those things will be all together can increase as well how good is the level of the financial literacy coming from the millennial. So I stop here. Again, back to you, Elizabeth. Thank you.
Thank you, Bapak Imansyah. Our last question from the audience before we wrap up is directed to Noraini. The question is, individual and social responsibility are rightly key pillars of financial literacy. Could you please share your view on bringing greater harmony between Sharia finance laws and regulations with the broader financial regulatory environment for the good of ASEAN economic integration and common markets?
Thank you very much. So putting the hat of a regulator. Okay, so I think there will always be, well, for Brunei, it's quite easy because of the importance, and also it's actually built into the central bank. A lot of the actions which are taken have also been looking at from the Islamic angle, really. And I think recently when we look at the Code of Market Conduct, for example, which was introduced by the central bank. I mean, if you relate it back on Islamically, so this actually promotes transparency as well. So there's already alignment that we can see here. So a lot of the what has been introduced by the regulators, the central bank, at least for Brunei, it has actually encompassed within the financial space as well, because as I said, Maqasid Sharia looks at the protection of wealth and also the protection of life. So generally speaking, it will be encompassed in all those two. But of course, we can take it further into cultural specific into each of the country. But there are a lot of similarities, especially if we take Islam as the religion. So that can actually be applied across the different jurisdictions within ASEAN.
Thank you, Noraini. Well, that brings our panel to an end. Thank you so much to our panelists. Thank you to our event organizers as well, and of course our audience members for participating. I found the discussion incredibly useful. I've been switching between my moderator hat and my researcher hat to try and help me figure out ideas for my research agenda. And I'm sure this is going to be useful for policy considerations being deliberated this year as well. So thank you, everyone, and I'll hand over back to Jenny now.
Thank you, Elizabeth. Thank you, Peter. Thank you, Ibu Noraini. Thank you all.
Thank you, everybody.
Bye.
Goodbye.
Thank you so much.
Thank you
Elizabeth,
so
all the way from Perth, and our panelists from all across the region and including Brunei. Thank you so much. So, ladies and gentlemen, we've come nearly to the end of our program today. So we're going to hand over to the Honorable Yanti Datuk Sri Laila Jasar Rahman. Yang Berhormat Yanti is the chair of the ASEAN Business Advisory Council 2021, and she joins us now for the concluding remarks.
Thank you, Jenny, and a very good morning to all. Excellencies, leaders of businesses in ASEAN and beyond, ladies and gentlemen. Now we have come to the end of our roundtable today. The discussion among our distinguished speakers have been very interesting, fruitful, and engaging. The ASEAN Business Advisory Council is very honored to host this intimate roundtable session, and we would like to express our sincerest appreciation to everyone for their valuable time to be here with us today. Now, we are also incredibly grateful to have the Honorable Dr. Seri Setia Dr. Amin Liu bin Abdullah, Minister in the Prime Minister's Office and Second Minister of Finance and Economy, to take part in giving the opening keynote address, and also Mr. Mubashir, the Managing Director and CEO of Bank Islam Brunei Darussalam, our lead partner, in sharing his remarks for today's roundtable. Now, we would also like to take this opportunity to express our gratitude to the keynote speakers and not forgetting government officials, leaders of businesses, as well as respective panelists and moderators for making this roundtable a success. Now, the roundtable reminds us today the fintech and financial literacy is becoming more vital than ever in ASEAN to ensure an inclusive digital economy across the region, especially during this pandemic time. As highlighted by our Honorable Dr. Amin Liu, ASEAN is one of the fastest growing digital economies in the world. Thus, it is critical to have steps taken to enhance financial literacy and ensuring inclusivity, leaving no one left behind. Now, furthermore, in the spirit of ensuring inclusivity, Mr. Mubashir also emphasized on enabling the empowering on the MSMEs in the most challenging time with utilizing the right tools to promote digital use as Brunei aspires towards dynamic and sustainable economy. And similarly, with Datuk Seri Paduka Awang Haji Ahmadin have also underlined the importance of helping the digitally excluded individuals with financial literacy in uplifting poverty and enhancing economic growth. Now, digital will undoubtedly play a center stage role in the recovery towards post-COVID-19. It will shape the new normal, leaving us with no option but to adapt and thrive in this rapid digital age. The time is now for companies and individuals to embrace the upskilling imperative so that we are prepared and adaptive for this technology-driven future of work. And we are excited to share with you on our upcoming second roundtable in September, which is Skills for a Digital Age. Now, this roundtable will be part of the ASEAN Business Advisory Council Legacy Project, hired HIRAD, which is a legacy project under Brunei chairmanship this year. HIRAD means Harnessing Impact with Resilient Employability Digitally, which aims to initiate pilot projects that looks into dual digital skills training and also mentorship that focuses on reskilling and upskilling in the digital space towards helping ASEAN to balance the supply and demand of its workforce. Now, this will also be followed up by workshops in having engagement with employers in October. Now, to conclude, I believe it is through the spirit of collaboration and unity that we can overcome the challenges and build a resilient, stronger future together, sama-sama, as reflected in our ASEAN Back theme this year. So I look forward to seeing you again in our next roundtable, and please stay safe and in good health. Thank you so much. To you, Jenny.
Honourable Yanti, Madam Chair, thank you so much. Ladies and gentlemen, we've now come to the end of our roundtable this morning on fintech and financial literacy. We had a great turnout. Thank you so much to all 300 participants who joined us from all across the region. So much engagement, so much discussion and conversation. Can I just conclude by saying a final thanks to our sponsors and our partners. Thank you so much to Brunei LNG, BIBD, Brunei Shell Petroleum, Baiduri Bank Berhad, Standard Chartered Bank, Brunei Gas Carriers, Mitsubishi Corporation and our partners, Radio Television Brunei, Borneo Bulletin, Media Permata, Darussalam Enterprise, and supporting organizations, EcoBoomi, Dynamic Technologies, Adenin Group of Companies, and the ASEAN Joint Business Council. It's been a very enriching morning. Thank you all. We'll see you all soon at the end of September for our next, as you've heard all about it, roundtable on skills for the digital age. That's it from us here in Brunei. We'll see you soon. Thank you so much.
Thank you. Thank you, everybody. Thank you, all speakers and panelists.